Hey guys, welcome back to the channel. And after a very long 3-week vacation, we are finally back in the saddle recording our videos. Well rested, got myself a little tan, and we're ready to rock and roll. This week, we're going to talk about an Inman article that just dropped today about mortgage origination fees that are going to start sometime next month. Now, this is part of a series of fees that have been generating since last year. This one's going to talk about some new ones that are going to be hitting borrowers very shortly. Hey guys, I'm Justin DeCrosta, and if you get any value out of this video, please like, subscribe, and hit that notification bell so you are aware and get updates on all of our future videos. We cover the real estate market both here locally in Milford and New Haven County, and some national stuff like we'll go over today. So let's check out that Inman article and see what all these fees are about. All right, here is the article in question. Again, just dropped today, April 26th, this morning at 6:23 a.m. So very fresh information. It says right here, Fannie and Freddie's fees are going up despite some lender objections. So let's see what these fees are, and then we'll discuss them as we get through here. So first off, where are we in this? So here's where I'm going off of. The risk-based fee increases are aimed at better ensuring Fannie and Freddie's safety and soundness. So they're giving you the reason of why they're upping these fees. We're going to look back at the end of the article at what some of the fees that have come down the pike already in the past year, and some of them pertaining to the first-time home buyers getting some of those fees waived. Sorry, I had a call. And if this is a supplementation to those fees, you know, it's up for discussion. We'll check that out. And so one of these increases, which applies to borrowers taking out loans with higher loan to value ratios. So what is a loan to value ratio? It is very simply the asset that you're buying. What is the value compared to the dollar number of the loan dollars that you need to purchase that property. And so what they're saying here is borrowers taking out with high loan to value ratios are going to be hit with an additional fee. Doesn't say exactly what that number fee is going to be, but usually something around 30 to 40% is going to be a pretty high loan to value ratio. And I would assume something along those lines where that fee would take into effect. The other increase, a new fee that targets borrowers taking out mortgage with debt to income ratios in that 40%. So that one they're saying is also going to be taking effect on May 1st. But they go on to say that the implementation of this DTI-based fee may be pushed down to August 1st due to some lenders having to update their internal systems. And so if we just back up a little bit, the DTI ratio, that's debt to income. So if you're unfamiliar with that, it's basically taking what your monthly debts are, car payment, monthly credit card bills, like the minimum payments on those, student loans, you know, an assortment of whatever debts a borrower may have on a monthly basis. Taking those into what do they make a month, and then dividing those together, and that's what you get, the debt to income ratio. And so obviously the lower the debt to income ratio is, the more liquid the borrower is, the higher it is, the less liquid they are, and thus a little bit riskier. But for people already maybe struggling to get into a home, having these added fees is not going to make it any easier. And let's go to some examples. Well, first let's scroll down to what they're saying about it. I think it's right here. I'm going to look at this little passage right here. The price changes will increase the cost of borrowing for a sizable borrowing cohort that presents a very low credit risk, while greatly lowering the cost of borrowing for borrowers that pose a significant credit risk to Fannie and Freddie, Rossi said in a complimentary piece on Tuesday. Rossi, this is this guy, Clifford Rossi, must be a representative of them, estimates that more than 25% of prospective borrowers will see their fees go up when the LTV increase fee goes into effect. That would be the LTV fee, the first fee that we talked about. That will be going into effect next Monday. A home borrower with a strong credit score. Okay, so here's what we're going to talk about. Where we want to back this up here. Yeah, so here's one of the examples that they use, and I think this outlines it pretty well. So 25 estimates that more than 25% of prospective borrowers will see their fees go up when the LTV increases go into effect Monday. We already said that, okay. A home buyer with a strong, so here's the good example. So this is how we'll break it down. A home buyer with a strong credit score putting 15% down and borrowing $300,000 at 6.4% would pay about $360 more a year to finance the new fee through their mortgage payment. So a minimal cost at $360, but this is kind of a base example. So they're saying good credit score, 15% down. I mean, that's a pretty strong loan to begin with. I know that I've done a lot in my career that are not very strong credit scores, maybe really average credit scores or a little bit below average, and much less down, 3.5%, 5%. So on a loan like that, I would imagine that these fees could probably double the $360 estimate that these guys have on a pretty strong loan. So you can just imagine, again, that if it's already difficult for a borrower to get into a home, this is not making it any easier. It's going to raise their monthly payment. Again, grand scheme of things, $300 to $60, maybe $600 total over the whole year. Not too much more, but just an additional hurdle to have to overcome when purchasing a home in the times that we find ourselves now. Let's look at the end of the article where they're talking about how all these fees rolled out in 3 stages. So the first one here, Fannie in fact raised on second homes on jumbo loans. And one of the things that they're saying here too is that because of rising home prices, they had to increase their conforming loan limits. Now, if you don't know what a conforming loan limit is, when you're using a Fannie or Freddie Mac loan, an FHA loan, there are limits per county onto how much you can borrow and what the value of the home is. And so there have been certain caps where you can borrow up to in different cities or really different counties. And so the higher the average price point is in that county, the higher the conforming loan limit's going to be. Because of the past couple of years where home prices are rising quite steadily, they've had to increase these minimum conforming limits. So they're having to borrowing more money, and all that's equaling out to rolling in some additional fees here. And so the first phase was rising some of the fees on a second home. So these are vacation homes, maybe investment properties, stuff like that. That happened last year. In October, the FHFA announced it would require Fannie and Freddie eliminate upfront fees for many first-time home buyers. So that's what we talked about at the top. Some of those upfront fees have been waived earlier in the year, and now some people are suggesting that these fees for non-first-time home buyers on the low loan-to-value and DTI fees are maybe a supplementation to some of the absence of these fees coming up. Whatever the case is, the price of owning a home is definitely becoming more difficult. in these times, and using one of these governmentally backed loans, these FHA, Fannie and Freddie Mac, it's not going to make it any easier for you guys. And so if you have any comments about if you're going to wait it out, or do these fees push you out of the real estate market, love to know why and what you're going to do to kind of combat, what you can do to supplement some of these rising fees, or it's just, it is what it is in today's home market. So love to hear your comments below, and we will talk to you guys next week. Oh, and I forgot, I wanted to do one quick little shout out while we are away, a personal item of my own. My kids here, as you can see, were in our local elementary school's production of Beauty and the Beast, and they got a nice little shout out here in the Orange Milford Times. And so there's been some big rave reviews about the high school, Amity High School's production of Beauty and the Beast, which I personally saw, and it was unbelievable. Really like Broadway type production. And if you think I'm joking, ask anybody who's seen it. It was like unbelievable. And they're not running it anymore, so if you missed out, I feel bad for you. But I do want to give our kids a shout out at Turkey Hill Middle School for their production of the play. They also did a fantastic job. Here's a picture of them here and a little article on their production. So that's it from here. We'll see you guys next week.